Welcome back to the Daily Journal. So we are reviewing the 10 a.m. reversal on NASDAQ from Thursday's price action. So it was this candle over here. So let's just rewind the clock to take you through my thought process for my model. So going to the session, if we look at the weekly candle, just to start off with here, this was the opening of the week. So we gapped open and price then traded lower and had a change of state delivery here and also this order block here, right? So this little tops up, you see that candle had no wick. That's a form of an inefficiency, and it's a very strong draw on liquidity. So just an FYI. So yeah, we had our change in state of delivery, here, and price clearly broke structure. And so we formed the wick of the weekly candle. We traded lower for expansion. We traded up. And what looked like relatively good highs, which got everybody kind of bullish, coming into the New York session, seeing the overnight move being bullish, seeing relatively good highs above, dropping into this fall fair value gap. People would look for an internal, external rotation type of thing. So the thing is though, this was SMT. ES had already swept that high. And what you'll notice just in high time frame downtrends like we are now here, right? So when the market is weaker overall, ES will be stronger for the most part, which would make sense, right? Because NASDAQ is a more risk on than S&P. Okay, so we had swept these highs, and below us we had these relatively cool lows. So we've swept liquidity here, and when we look at market structure, right, so we've swept these, right? So active these have swept, and from here we had a change state of delivery. We've also got an order block over here, as well as fair value gaps. So I was looking at this as resistance, but just keeping in mind these are relative core highs just in case my bias is incorrect. But the thing is, look at these relative core lows. So the overnight session has expanded, and let's just put our time levels in here. So there's a New York open. So, if we had have dropped lower, going into pre-markets, I would then consider these short-term highs as well as these relative highs. Because this over here may be relative lows, but it was swept with ES. ES did sweep this low. So NASDAQ, technically had swept out and it traded higher. Now, if we had dropped lower and swept all this liquidity, I would, be looking for longs. But here's the thing, going into pre-markets, we traded into that, respected this order block. See the body closed beneath that. Worked into that fair value gap. And then from there, once we got this shift over here, that change in the state of delivery, is when I started looking at all these relative lows. This is this low resistance liquidity, this big gap, and these relative lows here and here. So now to me, I'm just looking at this as a market maker model. And just to help me out, since most of my trades are long, I can see longs a lot more clear than I can see shorts. And to be fair, that's to be expected since it's been uploading since April. So a lot of the time what I do just to help me out is I just invert my chart. Because now when I look at that, I'm like, okay, this is, for me, clearly a market maker bar model. And, we've dropped into this fair value gap. We've had our shifts over here, having, high time frame liquidity sweep, low time frame liquidity sweep, changed the set of structure. We've, had this range, relative highs above, and then we've had one side delivery into this order block, into this fair value gap, discount of this range, had a shift in, a change in state of delivery here. And I'm looking to be very bullish. So yeah, at this point, I'm bullish, right? And this is exactly I was initially short, well, had the chart short, so just flipped it over just to help me out. And it's just something you can do if you're battling to see, if you often see shorts easier than longs or vice versa, just invert your charts. So for me, I got very confident at this point, and I'd set a limit looking for New York to trade. Maybe we consolidated here, we worked into that and then delivered lower. But with all this liquidity and just such an incredible trade, I went for a market order at this point. Only 2 macros, though it wasn't much, because I still had my limit there. Fortunately, I'd added, market ordered in because prices melted straight down, and I'd taken partials off at 2 to 2.5 standard deviation, simply because we had a one-side delivery going into the New York Open, and I didn't need to be greedy. So I took the rest off as this was the target I was going for. This was the market maker original consolidation. I didn't need to get this, right? And low-hanging fruits, you don't need to be perfect, you just need to be right. If you go for perfection, you'll drive yourself crazy. And so price did deliver straight to those targets and even lower. And if you look at the standard deviation from this range here, it really starts to make sense. In fact, you can see how we got a bounce at this and then eventually continued lower. So you'll probably find that on the high time frames, the standard deviation would make more sense. So yeah, that was the trade, and you can see my executions over here. That's where I took out the 2 to 2.5 standard deviation at the New York Open, and that was that target. And just to point that out, I mean, we just dropping down to the low time frame here. You might be asking, why don't I just hold all the way? Maybe I was wrong. Maybe my bias was incorrect. And when you've had just a banger like this, you can take some of the position off. I've had a great week of trading as well. Didn't need to be greedy. Just need to stack those wins. And you can see at the open here, price traded up, took out those short-term highs. This is where everybody would have got caught offside, right? Thinking this is a long to these highs. Changed the state of delivery here after taking out London low, and then it mounts low, catching everybody offside. And this is exactly the type of situation where you should just rather trade the continuation instead of the reversal, because we didn't get a continuation here, which just proves that you're not on side. That's why reversals are a lot riskier, especially as a beginner. And so yeah, and that was the rest of the price action. And so I did also trade the 10 a.m. continuation, which I'll do in the next video, which was such a beautiful trade. That for me is an A+. This was an A, B+. Simply because it was pre-markets. I'd rather wait for New York, but when you have the 15 minutes, and this is exactly why I was executing on the 15, is that I don't want to drop down to any lower time frames going into New York session. And as I've said before, it's a lot easier to execute on the 15 minutes. And so whenever I can, I will. And so yeah, what a pleasure. So yeah, thanks for joining, guys. I'll see you in the next one where I go through the 10 a.m. continuation, which was my A+ model. See you guys there. Cheers.